What is the most valuable lesson an investor should learn? This is something that we ask ourselves a lot at Southbank Investment Research, and it's something that we've been asking our editors recently so that we can share their answers with you. Today I'm joined by Eoin Tracy, an investor, a trader, and a strategist, to see what he thinks. Eoin, what do you think is the most valuable piece of advice you would give to an investor, either young or experienced?
I think it's simple. The one thing that I think most people overlook is position sizing.
Right.
Because you'll always hear of a fisherman who, there's always the big one that got away.
Right.
A lot of people, after they've closed a really successful trade or investment, what they'll often say is, I wish I bought more.
Yes.
But what they fail to overlook is that kind of gambler's bias.
Yep.
You know, the gambler always talks about their wins. They don't talk about their losses.
Right.
What we're always trying to do is minimize the loss. When you're looking for an investment, it's about risk management. That's in fact the one thing that all traders are taught. When you start off in an investment bank, it's about managing your risk, managing your exposure. But what that effectively means is looking at how much of something you're going to buy, not because of how much profit you're going to make, but for if you're wrong.
Right. Yeah.
That's always the question, is what happens when you're wrong? So you want to just stop and think about that before you invest so that you can decide how much of a position you're going to take.
Yeah.
If you can do that, then you can maximize your participation in the market. The one problem, and this is something that everybody has to learn, is that you can have the market right, you can be right in your call, you can be right in the timing of your entry, but if your position is too large relative to your capital, you can get knocked out of the position because your sensitivity to price volatility
yes.
is going to be too high. Then you're going to get knocked out. What's even more galling when that happens is that you're actually right about the direction of the trade. That it keeps going, it just does it without you.
Right, right.
Now that's a lot worse than at the end of a trade saying, I wish I'd bought more of it.
Yes, yes. So concentration risk is the issue here. Making sure that your portfolio isn't too concentrated in the bigger calls?
Well, it's not even so much about that. It's when you think about concentration risk, that's usually about the number of positions you have. It's about how much, when I'm thinking about position sizing, it's about how much volatility are you willing to accept. Now, this is something that you're going to be asked anytime you set up an account with an investment advisor or Hargreaves Lansdown. They ask you to fill in a questionnaire and they say, what's your risk appetite?
Yes.
Most people will say it's low risk, but then they end up making big risk decisions. A lot of people who start off thinking they're big risk takers, then they go through a bout of volatility and they in fact find out that they're not big risk takers.
Right, right.
The only way to do it, to come up with an answer to that question, is to start off small and measure your volatility, risk, and tolerance. If you go all in because you're passionate about the story, I mean, I'm talking about this because it's from my personal experience, right?
Yeah.
So I've been there, I've done it, I've made the mistakes. That's why I'm relating that to me. This has been the most valuable lesson I've learned.
Certainly.
So I've made those losses. I've gone in for something that I thought was an absolute dead cert. I knew gold, for example, was going to go through $800 back when it was going through $800. I was leveraged to the hilt.
Right.
I was making double my annual income out of trading gold at the time.
Right.
So I was really heavily into it. I had way too large a position. I got very overconfident, and when it did eventually break out, I got stopped out, and then it broke out and rallied nearly $100. I was sick to the stomach.
Right.
That's way worse than having had half the size of the position and taking part in the entire thing and then second guessing it later. So you need to think about the repercussions of taking too large a position.
Certainly.
That's
in
the
terms
lesson.
of a rule of thumb, I remember you once told me before that if you're worrying about a position, then it's too big. Do you think
Exactly.
do you think that's the sort of a fair, a simple sort of way of approaching this kind of thing?
Yeah, that's one of the oldest adages in the markets, is that you sell down to the sleep level. Actually, I've seen that quite recently. There's one of my clients was invested in this bank in India called Yes Bank.
Right.
Yes Bank is down 80% off its peak. One of the definitions for a share that's down 90% is that it was down 80% and then halved.
Right.
Right.
Yeah.
So he was buying it in. He bought too much of it.
Yeah.
He could not sleep at night. His wife was complaining. It was the family trust. So he sold half the position. Now, since then, the price did go down more, but it's because of the size of the position is now less. The acceptance of the volatility is better.
Yeah.
So they're well positioned for when it does start to recover, they'll still be there.
And he can sleep at night.
And he can sleep at night. And more importantly, his wife can sleep at night.
Right.
You know,
Right.
that's often, familial bliss
Quite.
is one of the greatest achievements any of us can have.
Right.
So sizing your positions accordingly
Yep.
is going to ensure that everything flows smoothly.
Right. Right.
And that really is what we're all looking for.
Quite. Well, Eoin, thank you very much. I think that was a very good and quite concise, but a very good sort of insight into position sizing. Thank you very much for joining me.
Pleasure.
Well, there you have it, folks. That's Eoin Tracy's single most valuable investment lesson. I hope you enjoyed it. But you might be asking yourself, who is Eoin Tracy? Who am I, for that matter? And what is Southbank Investment Research? If that's the case, do take a look at our Facebook page, our YouTube channel, or just go on to southbankresearch.com to find out more. And you'll find out plenty more content quite like this. Thank you very much for watching.